So make this exciting for us.
I know you brought me on because the markets are quiet today. So the funding tool that you were just talking about are the kind of access to the repurchase, trading repurchase agreements, right? So regulators mentioned this briefly yesterday at a Bond Connect anniversary event in Hong Kong yesterday. Why they're looking at it now, it's obviously kind of the next step, the next progression in terms of opening up the capital markets. They launched the so-called Swap Connect last month, which gives offshore access to these onshore interest rate swaps, but so far demand has been pretty light. I think this week they came into about 3 billion out of a 20 billion quota. So clearly the repurchase agreements kind of is the next step in terms of allowing global investors to embrace that hedging tool onshore.
How has it changed the game, and what do we know in terms of timing now?
Right, so for these players that are involved in the derivatives market, obviously liquidity and borrowing costs are very big factors when it comes to their trades. And so the ability to access the repurchase agreements allows them to amplify their leverage, essentially make more money, right? And also post bonds as collateral, so they get access, they come back to the interest rate swaps market to lock in that funding rate. So the idea is that offshore entities right now don't have access to that. They have limited access. You have to have an onshore entity to be able to access that repo market. And the regulators are looking at researching this, but they didn't give any sign of kind of how much time, the time horizon of all of this is. We spoke to a market maker last month. They said potentially in the next 12 months. But I think it all depends on these market conditions. If for example, like if you look at just the interest rate differential right now for U.S. and Chinese government bonds, that gap is still very wide.
Yeah.